talk about the weights over here. But for me, in an order flow chart, the one which stands out the most in terms of weightage, in terms of the weight of the signal in the order flow chart is always your IB30 signal, right? Just think of it as your Nifty 50 with your Reliance, SBI, all these instruments put together. You will see that Reliance has got a higher weightage than the other thing, even though you're trading the Nifty 50, right? So there will be some which have got a higher weightage than the others which have got low weightages, etc., etc. So we give it a priority, and the proper way to look at all that priority and that hierarchy, as we call it, is to give a lot more weightage to the initiative buyers and the initiative sellers, right? Then you can say you can look at your cot, then you can look at the liquidity in the bar, then you can look at the volume clusters. But it is always a collection of all of these traders and selection of all these traders which make up the order flow chart. So you start off with I. Right? There is a hierarchy over here, and in that hierarchy today I've just spoken to you about the crown. So there are two rules which we surround these IB and IS signals with, and the first rule is the high of the IS bar and the low of the IB bar become immediate stop losses with a small filter. The second rule is all these signals are valid for 10 bars. So if they came in about 30 minutes, they are valid for the next 300 minutes. So we always define our signaling in terms of time. One signal which is come in on a 30-minute time frame or even on a 5-minute time frame is not valid forever, right? So a lot of traders what they do is once they get a signal on whichever chart, on whichever indicator they are looking at, they expect that signal to last them for a lifetime. That's not how the derivative market works. The derivative market is very time defined. Time is a very critical element of the way we work in our markets. So every single signal, every single message which comes to you has a defined time to it, an expiry date. And for us, that expiry date is 10 bars. So after that expiry date, that signal is no longer valid. Right? There is a hierarchy over here, and in that hierarchy today I've just spoken to you about the crown, the jewel, in that entire crown is that IB30. We will talk about the weights over here, but for me, in an order flow chart, the one which stands out the most in terms of weightage, in terms of the weight of the signal in the order flow chart is always your IB30 signal. Right? Just think of it as your Nifty 50 with your Reliance, SBI, all these instruments put together. You will see that Reliance has got a higher weightage than the other thing, even though you're trading the Nifty 50, right? So there will be some which have got a higher weightage than the others which have got low weightages, etc., etc. So we give it a priority, and the proper way to look at all that priority and that hierarchy, as we call it, is to give a lot more weightage to the initiative buyers and the initiative sellers, right? Then you can say you can look at your cot, then you can look at the liquidity in the bar, then you can look at the volume clusters. But it is always a collection of all of these traders and selection of all these traders which make up the order flow chart. So you start off with IB.
Good evening, guys. Good evening, everyone. A quick sound check. I hope I'm coming across. So let's start this Monday 5 p.m. session with a review of what has happened last week and what happened today. And then during the close of this session, we will cover up the position table which we have on the Vtrender chart section. So let's get to the weekly report which is put up on the website. This is based on spot because on higher time frame, especially when you are getting an expiry coming near, these references become more and more important. So what did we do in Nifty spot last week? The profile before last week was a neutral extreme to the downside, and it had completely higher value because we opened higher and we formed this POC, prominent POC at the top 25109, which is also the monthly POC of June and will be an important reference all of this week into the not just the futures expiry but also the calendar month 25109. So this POC shifting higher was telling us that the buyers who had come in earlier were booking profits, and in the neutral extreme profile to the downside we left these couple of extension handles at 25009 and 24844. The screen is visible, guys. Great. It should be some issue at your end, so please check it out, Shubham. Coming back to what we are discussing, the spot started with a probe into this single zone. And in the neutral extreme profile, which we made last week, what we saw on Friday was a responsive buying tail. Where did it come? It came right at the weekly POC of 24593. So this was our support. So we had mentioned this. So we had this 24680 and 247,593 as our lower supports, and on the upside we had this extension handle at 24844 and 25009. So what did we do in Nifty spot last week? We started with the uh, auction forming value in this single zone, but it the entry into this ITPO selling tail was met with rejection because we got this AP rate selling tail here. On Monday we made similar highs, and on Tuesday we got this selling tail. So that was telling us that this zone is still held by the sellers. And then what we did, we formed a 4-day balance, and from this balance we got a move away on Friday. We started with an open drive up, and then we went on to tag this weekly POC of 25109. But this was not a ideal trend day. It was more a P-shaped profile. You can see how the move came in the first half of the day, after which we remained in a balance. So you can see this P-shaped profile has got a very nice value area, Gaussian curve. So trend day generally don't have a balanced value area because it is an elongated profile. But in Friday's case, it was a different kind of a trend day because we didn't get an elongated profile. And after the initial move which came in, it started to form a balance. So what was the view for this week? The weekly profile is a normal variation one to the upside, which was forming mainly lower value. So the value area was at 24762, 24790, and 24924. And it mainly filled up the low volume zone of last week, but made a definite move away from the value along with a close around the highs. So the PLR, because of the close being around the highs, the PLR was to the upside, but it needs to stay above this 25109 level. So what did we do today in Nifty spot? We'll just cover that in a bit. Before that, I would want to even cover up the Bank Nifty profile so that we can then do a review of what has happened today in spot in both of them. So this was our reference for today, and you can see the lowermost hypo on the downside was this monthly IBH 24845, which will continue to be an important reference all of this week. So what we did today, we'll come to that in a bit and we'll see how this held the downside. So coming to the Bank Nifty spot, Bank Nifty also was a neutral extreme profile to the downside in the week prior to last week. And similar to Nifty, we had left a buying tail. So again, the single zone of 5566 to 980 was the supply point in Bank Nifty. And whereas this 55149 to 55373 was the support, the buying tail of previous week's profile. So what did we do last week was we took support right about this buying tail, and we again, similar to Nifty, we formed a 4-day balance. Even in Bank Nifty, we saw some supply coming in on Tuesday, which marked the upper range of the week. And then from this 4-day balance, we made a move away on Friday. This was again not an ideal trend day, but more a P-shaped profile, which was caused by short covering. And we had a nice balanced value area zone. So what we did in Bank Nifty was again a normal variation profile to the upside with a Gaussian curve as the value. 55613 to 55925 is the value area of the weekly chart. And then like Nifty has given a move away. So we expect this to continue if the closing HVN of 56140 would have been sustained. So Bank Nifty, just like how 25109 was our bullish reference for the open today, 56140 was the similar reference in Bank Nifty spot. So these were the hypers for today, which were mentioned along with the hypers marked on the daily chart. So let us open both Nifty weekly and the Bank Nifty weekly to see what we have done today. So today we opened lower, and the lower open so you can see how we open lower. What I'm going to do is I'll again split this weekly into daily charts so that we can see in what happened on the daily con. So you can see how we opened lower, and in the first probe was to the upside. But in the probe upside, we entered this value and got rejected. So we have been maintaining how in market profile we need to look at imbalance and balance and rejection and acceptance. So when you're getting a rejection in one direction, you know that the auction wants to test the other direction. So this was an open rejection reverse start in Nifty spot. After the lower open, the entry into previous value got rejected. So what did it do? It went on to test this buying tail from Friday, and it made a low of 24824. And you can see how that level of 24845 was being held, and we got the buying tail right there. You can see this BTPO halfback right at that important reference of 24845. So what was this telling? In spite of the open being a bearish one, some demand came in at one important reference. And what it did, the demand went on to make range extensions higher, and the entry into this value triggered the 80% rule. And the 80% rule, the first objective would be to tag the POC, and that is what it did. It hit the POC and it made a high of 25067 today in the J period. And JTPO is something which we consider to be the cousin of C. So we don't trust a move which happens in the C or J, and we want it to get confirmed by either the D period which comes after C or the K period which comes after J. So once the K period did not give any follow up, it was clear that this was more a fake move. And that is the reason we went on to uh, close right at that POC of 24948. So what have we done today? We have formed a nice inside bar which was completely inside previous range, and what it has done is it has filled up the low volume zone of the irregular trend day profile of Friday. So also we can make a note that we have similar tails at both ends, inside bar with rejection at both ends. So we need one of these ends to get negated. That means we will need to get accepted above either the highs of today or the lows of today for a move away from this. So today on the daily was a normal variation day to the upside, but it is also an inside bar. So we will have to check out how compared to today's value we shape up tomorrow. So references for tomorrow in spot as well as the entire week. The first reference would be this KTPO halfback of 24998 on the upside. The close I think was around 24970 today in spot. So we will need to first get about this 24998, and then as I mentioned we will have to negate this tail of 25057, I think today's high 25057. Yes. So once we get about this, the next reference would be this POC, which is also the monthly POC. So how do we figure out where the POC is of the month? It is very simple. You just need to go to the monthly chart of Nifty spot and see what is happening on the monthly time frame. Monthly is for longer time frame charts, but it helps to have a look at that, the monthly chart, especially when you are starting a new month or when you are about to close the month. So you can see how this POC is at 25109. This is the monthly profile of June. Hence, we will need to get above this to be bullish for this expiry. If we are not above this, then we can expect a neutral center profile close on the monthly. So we can close somewhere in the middle. So this is how we are placed. So this is how you can relate to what is happening on the bigger time frame and take those references on the smaller time frame. And especially because we have the monthly expiry due, this becomes all the more important, the 25109. So just switching to the daily chart and giving one final list of what the important levels for tomorrow would be. So as I mentioned, 24998 would be our first reference on the upside, which is the KTPO halfback. This would be our first reference. Above this, we will need to take off this 25057, which is today's high, and then that 25109. So those would be the references on the upside, whereas on the downside, this POC would be our immediate reference. If we stay below 24948, which is also where our rollover point is, the rollover point of the series of June, which we carry forward for the entire series, is at 24945. So today's POC is aligned right there. So we will have that as our immediate support, and if that is not tagged, in fact if that is broken and sustained, then we will look at the lower support of this halfback in the CTPO, which is at 24891. So why are we taking these halfbacks? Because in spot we don't have volumes, we have only the TPO chart. So any halfback which has not been tagged, you can see how the CTPO halfback was not tagged. In fact, this was also the scene of crime because this changed the complexion of the auction. Till the B period, we were looking at more downside because we had an open rejection reverse chart. But once the C side made a move higher, tag this halfback of A, what we had to see was if the D will continue to go higher, and it did make higher highs and it did not get below this halfback. That is the reason this becomes an important halfback reference. Same thing in K, because even in the J you can take this as a important reference, and then the KTPO also, this halfback was not tagged into the close. So that will be the first reference which the buyers will have to take out on the upside. Then it will be this 25033 and the highs of today. So that is how we take these references and we put them on the report also on a daily basis. We update these hypos based on what has happened with the latest profile, and accordingly look for movement in the next session. So on the downside, 24948 and 24891 would be the reference, and below that we have that 24845 zone. So if that is broken, then we are back to tagging this lower weekly VPOC of 24790. So these would be the references on the downside for tomorrow. We will have these covered in the report where the hypos for 24th June would be put up. So you don't need to worry if you have not made a note. But what has happened today is what I was trying to explain. So let's now move on to the Bank Nifty spot profile and see what we have done today in Bank Nifty and prepare ourselves for what lies ahead in the monthly expiry week. So Bank Nifty also as we saw, was forming a nice Gaussian curve on the weekly profile, which from where it made a move away on Friday. So this was a nice balanced profile from where we made a move higher and got into this weekly value. But you can see you have this extension handle at 56382, I think, the weekly extension handle. This has been mentioned in the report also. So we stalled right there. And then what did we do? We today, same thing, similar to what we saw in Nifty, Bank Nifty also opened lower, made an entry into the previous day's value, but again it got rejected. So even in Bank Nifty, we had a open rejection reverse chart, and we went on to test this extension handle which we had 55833. This was an important reference, and this was mentioned in the hypos for today also. So what we saw was this held. In Nifty, we saw a test of the A period buying tail, but in Bank Nifty, it never went even to that level. We held this level, and what we saw was the base was building at this 55923. So you can see how, so importantly, both in Nifty as well as Bank Nifty, today's POC is right where the rollover point of the June series is. So after everything which has happened in the month of June, both of them have again formed a base right at their rollover points for a move into the expiry. So just like how 24948 was our reference in Nifty spot, this 55923 would be our reference in Bank Nifty spot for the remaining sessions of this week. And we will need to see from here what move it gives, whether it is giving an initiative move to the upside or to the downside. And that could set up the expiry week for us. So what have we done in Bank Nifty? On the daily time frame, we held this extension handle, and once we got back into this weekly value in daily value of Friday, we got about this POC of 56140 and made a high of 56233. So same, this happened in the J, and it has left a untouched halfback in the J. So this would be our reference on the upside, along with the extension handle which we have on the weekly, which is here 56382. So those would be the references on the upside if we stay above this value of today and this POC 56140. On the downside, as I mentioned, this today's POC would be the immediate reference. And if I switch it to the daily profile, you can see how we have had a normal variation profile, and very clearly it is showing how today's value is just filling up the low volume zone of Friday's trend up profile. Because the upper part was already filled well, it was only focusing on this, and that is where today's value is. So the auction wants to fill up and complete the business in every zone before it moves away from that zone. So that is what it is doing. It has left some unfinished business. That is what it did today, and tomorrow we will need to see, tomorrow and in the coming sessions, whether it gives a move away from this profile or continues to remain in this profile. So on the upside, as I mentioned, this extension handle 56382 would be the reference if we are able to get above this 56173 and today's highs of 56233. And then we already have the upper hypos marked. On the downside, this pullback low, which is near 56,000, would be the immediate support, and this POC of 55923. Below this, we would again look for a test of this buying tail and this weekly VPOC of 55682. So 24790 is that important support level in Nifty spot for this week, and the similar reference in Bank Nifty spot would be 55682. Both of them are weekly POCs of last week, where the volumes had accumulated, where both the players had accumulated, and from there we have seen a move to the upside. So for the buyers to remain uh, in control, this will have to be held, and we will have to form higher value on the daily. So this is what the Bank Nifty spot is looking like. Let us now move on to the futures chart, and we have the Nifty futures profile chart on the left and the order flow to the right. So another important point which we wanted to discuss today is, in the expiry week, you will have to take this 10 bar caught with a pinch of salt, because the expiry week also gets the rollovers to start. So whatever caught, 10 bar caught you are getting on the 30 minutes and on the 3 minutes, more on the 30 minutes, you will have to check it with what is happening in the next series. So because here we were seeing completely green caught, but when you go to the July 30-minute order flow, you can see how there it was majorly red caught. We had, I think, minus 9,600 red caught, and I have that. So you can see this on the left hand side is the 30-minute order flow chart of July futures, Nifty futures. So you can see how the 10 bar caught is negative minus 9098. So that is why it is very important to be in sync in the expiry week about what the 10 bar caught wants actually to give. So it is very important you compare that 10 bar caught with the new series. So let's come to what has happened today in Nifty futures. Nifty futures also, if you see the first 15-minute order flow, you can see how we made a lower open, we got back into previous day's value, and because it was a trend day on Friday, the VWAP was very important. In fact, we have a daily report which goes out with the futures levels on the website under the forum section, and we had this reference 25008 as marked as an important one because it was the VWAP of the trend day. So what we saw, the open was a lower open and a probe back into this value and a test of this VWAP. And you can very clearly see in the test of the VWAP, you can see how many rows of zeros you have got on the buy side. 1, 2, 3, 4, 5, 6 rows of zeros. In between you have one number. So this is very clearly telling us that the test of the VWAP failed to get any demand. So when that happens, you know that the PLR is to the downside. And that is the reason what we did at the open. This was an open rejection reverse, and we went on to tag this prominent POC of 24825. It was from this prominent POC where we got an open drive up on Friday. So it was when the order flow showed us no demand above the VWAP, it was very clear it will probe lower to find buyers, and this was one objective. So what did we do when we tested that? We got greens. So similar to what we saw at the top, we got zeros on the sell side. Here you can see a big buyer and zeros on the buy. Sorry, we saw zeros on the buy side at the top. So here you can see a big buyer and zeros on the sell side. So when this POC is showing us demand, it is telling us that this zone is not getting supply. So downside gets limited. So if you are short because of this open rejection reverse, this bar would tell you to book shorts, book profits in short positions. This is still not a long because we are still below days VWAP. So what happened then is we went on to probe higher, and this 1030 bar when we closed above the VWAP was the reference that now the buyers are taking over the control because the sellers have failed. And once a strong open gets negated, there is a good chance that the auction will continue to probe higher and take off the highs of the day, and will try to also tag the upper objectives. So that is what happened. You can see the value area low was 24931, and that is where our opening bar POC was. So this is how market profile and order flow will give you a combined lethal reference, because market profile is already showing you that below value we are bearish. Order flow is showing you 1000 seller there. So this was our reference to for the sellers to come back, and they even made an attempt to do that in the first, because we got an RS bar, but this dip took out at the VWAP. And again you can see order flow is showing supply dying at the VWAP. There is no supply. 090 are the numbers you're getting at the VWAP test. So this is telling us the supply is not coming in, and the buyers are now gaining in confidence. So once we got back into this value, we went on to retest this VWAP, and then all almost tagged this POC of 25103. We just fell short of that, and I'll just convert this to the 30 minutes so that we can do a quick review of the order flow and see how we are placed for the move forward. So you can see how the entry into this value first got us the VWAP tag of 25008, and then we almost went on to tag this POC of 25102. So what happened? This again happened in the J period, and the J TPO is something we do not trust. So once we did not get confirmation in the K because it remained below this VWAP of 25052. This was also confirming a responsive selling tail at the top. So what we got was a retracement back to 24975, which was the scene of crime, because after the initial consolidation, you can see how we broke away from this 24970 level. So this is how we are placed, and similar to what we saw in spot, futures also is forming the POC right at the same level of 24948, which is the rollover point. So because it is expiry week, there will not be much of premium. So hence both of them will overlap. So 24948 will remain one important reference in both Nifty futures as well as spot. And you can also see how you have this IB30 in play. So the lows of this IB30 is also around the same level. So this will be our reference support going forward, 249948, 940 roughly. And then on the upside, we will have to take off this VWAP from the JTPO, today's VWAP, which has got us a responsive selling tail, and this POC from Friday. So these two are the references on the upside in Nifty futures, whereas on the downside, if we break below this 24940 and hold, then we are looking for a test of this scene of crime, 24891. So you can see we also saw that halfback in the CTPO of spot also right at the same level. So because it's expiry week, both of them are overlapping, and not much of premiums would be there. So we can have some good references overlapping in both Nifty spot as well as the futures. So if this is taken out, then again we'll come back to this POC, and this will be the swing support, and break of this can give us a move to this lower VPOC, which becomes the objective. If we get initiative selling at this 24823 and the 24790 where we got demand last week, we can look for a tag of this 24723 on the downside. And on the upside, we have this swing high of 24307, which can come into play if we get some initiative buying, which can take off this POC and sustain. And we have this selling tail from 25,200 from 12th of June, which was a trend down profile. So these would be our upside references. So the order flow will be very clear in telling us who of the buyer or the seller is having the upper hand. And as per the market profile reference, as and when we get good IB or IS signals in the order flow, we can look to trade in that direction. So I'll just take up a query which has come up. Amol is asking what is meant by a prominent POC. Prominent POC is a POC which is overlapped almost all days of the week. So if we are talking about a prominent weekly POC, I'll just show you the example in this particular chart itself. So you can see how these 2 days, very clearly you can see all the TPOs are aligned over here. So the maximum number of TPOs wherever it is aligned, and it gives you a Gaussian curve that tells you that this is a prominent POC. So this is where both the buyers and sellers were in agreement that this is a fair price. So what is the advantage of having a prominent POC? You can look for a move away from that POC, which came in on Friday, and we got that big trend move upside. And that is the reason when in the fall today, we took support right at that reference. So prominent POCs also serve as magnets till the time it does not get initiative move away from that. And once it gets a move, an open type a strong open type is confirmed, then you can look for a good move away from that POC. So that is what it is. And let us now move on to the Bank Nifty futures and today's order flow and see how we are placed in Bank Nifty before we move on to the closing section of today, which is discussing the positions. So I'll just start with the 15-minute order flow to decode the open type in Bank Nifty and see how it shaped up for the rest of the day. So on the left is the profile chart, similar to what happened in uh, Nifty. You can see we opened lower, made an entry back into the previous value and tested this trend day VWAP of 56119. And this test of 56119, you can see how just like we saw zeros on the buy side in Nifty futures, same thing is seen in the Bank Nifty futures. So when you see this at a trend day VWAP, you know that the buyers who had forged the trend day are no longer wanting to defend that level. So that is the reason this was also an open rejection reverse, and we went on to make a low of 55805, which was just holding this buying tail from Friday. So initiative tails are very important, and we carry them forward till the time they do not get negated. So we, for this open rejection reverse to give us more downside, this tail had to get negated. The sellers had to break into this, but that did not happen. What we are seeing in order flow very clearly, and this is again what we saw in Nifty futures also. We saw no demand at previous VWAP, and we saw no supply at the previous day's buying tail. So when you're getting this, you know the range for the day is fixed and this will give you support. So if this is supporting, the natural move for the auction would be to get back into previous value, test the POC, unvisited POC. And that is what we did. I'll just shift it to the 30-minute order flow and do a quick review of what we. So once we got the RB bar defending the previous tail, you can see how this another one more important point I would want to mention here is this 55980, where you can see the auction stalling in the first half of today, is the series POC of June Bank Nifty futures. Hence, this will be very important going forward. 25109 is the POC in Nifty spot as well as in futures. Although we have an HVN at 24854 also in futures, which is where we took support today. So 24854 and 25109 would be the levels where the volumes have been the highest for the series of June. And in Bank Nifty 55980 is that reference. So the open rejection reverse saw an attempt being made by the sellers to hold this. But once they gave the gate pass, you can see how we got a quick squeeze higher to this 56,300, swipe through this value almost, and then because it came in the J and we did not get any follow up in the K, we then went on to get back to the VWAP level. So this is where we have closed today. And what we have done again in Bank Nifty, we have formed a 313 profile. We have small tails at both ends, and range wise, we have formed an inside bar. So same thing what we discussed in Nifty, it has just filled up the low volume zone. You can see the value is right where the low volume zone of Friday's profile was. So we can look for a move away from this 2-day balance, provided we get initiative volumes above this NPOC of 56206, or on the downside, you can see how today's POC is also aligned almost similarly to spot. 55923 was the spot POC of today. 55949 is the BNF POC. And the rollover point needless to say, is at 55,900. So we are around where we started the series. So we will have to wait and watch if we are getting volumes, initiative volumes, which can give us a move away from that rollover point in both Nifty as well as Bank Nifty futures. So this is how we are placed in Bank Nifty. Let's see how it shapes up for the series. Order flow we use for 30 minutes and 3 minutes. 3 minutes, 1 minute, 5 minutes are also available. 15 minutes also is there. So we don't use order flow to watch daily charts because that is not as informative as the shorter time frame hours, because you can see in 30 minutes market profile is based on 30-minute blocks. Hence we use the 30-minute order flow for the bias. Anything higher than that will not give us the right cues, because the markets are getting faster and faster and bigger players are increasing their volumes and holding those positions for shorter periods. So it is important for us to watch the 30 minutes and the 3 minutes, or maybe the 5 minutes. So Balaji has a question about what conditions 80% rule come into play. 80% rule in market profile, we trade value, we do not trade the price. So whenever you have a nice value which is formed, so and the market is opened away from that value, whenever it re-enters that value area, so there is a 80% chance that it will go on to complete the entire move through that value area. So the basic condition for the 80% rule to work is the value which you are looking at should be a nice balanced one. 80% rule will not work on neutral, extreme and trend day profiles, because there you have an elongated profile, hence you will not have a balanced value. So whenever there is a balanced value, that tells us that sellers and buyers were in agreement, no one person was dominant. So that those value area zones, whenever it is revisited, give you very good opportunities to trade, and that is what we do, trading the 80% rule, using the 80% rule. And we have these uh, terms marked up on our glossary section also. You can always revisit them on the website and you will find them handy. Yes, I already showed that, Nitesh. It was the July 10 bar caught, which was at minus 8,800. So expiry week, it is always important to give attention to the next series volumes also. So don't go blindly with the current 10 bar caught. Always sync it up with the uh, next series 10 bar caught. Also, same applies to the LLTs. LLTs, whenever they are turning up on the expiry week, make sure that you are comparing them with the next series, just to make out whether it's a roll or whether it is a just a volume in the current series. PPOC is prominent POC. So now let's get back to the last section. One important point one chart I want to show, which is very useful in the expiry week. All settlements, in fact. So on the left, we have the Nifty NTM OI chart. So this gives us the spectrum range. So you can see the spectrum as of close is at 24,800, which is the put wall or the lower end on the spectrum, and 25,300 is the CE wall or the higher range of the spectrum, and 25,000 is where the gamma 0 is. So today we saw in the option table lot of volumes, open interest was coming in the 25,000 call and put, and also the 24,900 call and put. So we will have to see how tomorrow and day after also progresses, and how the spectrum range contracts or expands, and also where the gamma 0 is. If the gamma 0 stays at the 25,000 level, so that will be our reference for this month's expiry, and we will see what happens on the expiry day in the call and the put of that strike. So same in Bank Nifty, because this is the monthly expiry, Bank Nifty options also will get a new life, because the other weeks there is no settlement, so Bank Nifty has become very dull when it comes to option trading. But because it's the expiry week, you can expect some fireworks in this Bank Nifty also. So the spectrum for Bank Nifty is 56,000 is the gamma 0, 55,500 is the lower range, and 56,500 is the upper range. So this is one important chart which you would want to follow every day on the settlement till the settlement is done. And definitely once the settlement is done, there'll be a reset. uh, every Thursday we reset this, and we see what the option players are doing for the new settlement. So coming to the last section, this participant wise positions which we have in the Vtrender charts is something which gives out lot of important information. So I'll just take you down to the bottom of the screen, and we track this series by series, because derivatives is something which is for shorter time frame. So we have this series which start every month and expires on the last Thursday of every month. So these positions which are built by all these, we have four sections: the FII, pros, clients, and the DIIs. These four are the major players, and all the positions which you see them building, yes, FII and DIIs, you can take them as holding for a longer time, and they may be using the derivatives as a hedge for their long term holdings in cash. So but they will also keep changing their position series by series. So that is why we follow this position table on a daily basis for all these four sections. So you have the column here, FII, what the FIIs have done. You can see the FIIs were net short at the start of the series, which was 2nd and 3rd of June. You can see they have built in shorts, and you can see what they are doing in the call options and what they are doing in the put options. So you can, and that is what will also help us to figure out how the inventory is placed overall, if the FIR short or long biased, what the pros are doing, and what are the clients doing. Most of the retail come under the client section, and it is not necessary that all retail is dumb, because you have some HNIs also playing as retail, and they have some wonderful strategies which they employ to take position in this. Same goes with the products, proprietary desk, because they are also not all of them will have the same view, but all of them will definitely have some smart trading strategies which they will implement. So it is very important to see what the pros are doing. And yes, different the prop decks will have different strategies, and accordingly they will build in positions for that time frame. So if you're seeing a net long in futures, they may be hedged with a net short in calls, or vice versa. So this position table gives us a clear idea of how the inventory is placed and who is going to benefit from what kind of open we have the next day. So here if we see, this is the closing summary of Friday. So you can see in this closing summary of Friday, what the FIs have done. They are net long in futures, but in calls they are short. In puts also they are short. So more or less they are, it is not, you cannot say that they are extremely bearish or extremely bullish. It is completely hedged, you can say. So the main volume drivers in the derivative market series by series are this pros and the clients. FI and DI are more for longer time frame, who hedge their cash market positions. So what we focus on is in what the pros are doing and what the clients are doing, and how they are uh, placed compared to each other. And mostly they are most of the times in opposite positions. So because what the pros are selling, the clients buy, and vice versa. So that is the reason they have the we need to follow what the pros and the clients are doing. So we have this table at the door, and you can click on whichever section you want to see, and you can see what that segment is doing, what the pros are doing for this series. In futures you can see the pros started with being net long, and then they covered their positions and they went short, and then they again came back long in a big way on 16th, where they added 15,000 contracts, and then they have been biased long side in futures. In calls again, you can see how when they went long in futures, they also went long in call options. So this 16th of June was an important day where the pros were aggressively long, because you can see in the futures they were net long, in call options they were net long, and in puts they were net short. So this is giving us a purely bullish view of what the pros have done on 16th, and 16th was the day where we got that move away in Nifty futures from the 24824, which became our focus point. In fact, it is the same place where we took support today also. So we will have to wait for what data comes up today. But then this is how you can figure out what the pros are doing, and then you can compare it with what the clients are doing and how they are placed, and accordingly you can look for a series to series bias of what the series is holding in terms of net short, net long, how much of calls have been held, whether they are the calls are net long or whether they are net short, how much of puts have been shorted. So it is very clear if the put OI is more, market is tending to go higher and vice versa. So that is something we can track with this position table, which gets updated every day in the evening once that data comes in from the NSE. And as I mentioned, pros and clients are the major players in derivatives, and they are the ones who will keep changing positions in a big manner. So that will be where your focus would be. FIs and DIs would just be doing it on a smaller basis, but the pros and clients is what you will get. So for example, we had a trend day up on Friday. So we would want that open interest participant wide positions also tell us that the pros are holding longs, and you can see that was the case. You had 17,000 net longs in futures, 226 net long in calls, and short in puts. Hence the reason the lower open today was again defended and the pros, the buyers came back. So we will have to see how they are placed today, and then accordingly look to trade what open type we get tomorrow. So we these are very important informations, and they give you a lot of important cues. So because there is in derivatives, there is no point following 12 months and 20 months, what generally we follow in cash market, because derivative does not work like that. And as we mentioned, markets are getting faster and faster, and these players keep changing their positions even with faster frequency now. So, and again, one more point to repeat: retail is no, not all retail is dumb money. There are some retails which are HNIs putting in their money into some smart trades. So they would have a plan, and according to that, they would be placing their trading bets. So I'll just get back to queries. ProDesk was not short. We have seen that. This is the ProDesk data of 20th Friday, and I just repeated that, Prashant. We have 17,000 long futures and 2,226 long calls and 37,000 short puts. So it was, pros were definitely biased on the long side. Proprietary desk are considered to be the smarter money, because all the retail come into the client section. So we would want to see how the pros, but then again we cannot just cut off the clients to be uh, dumb money, as I mentioned, because some of the clients also have the HNIs. So what we need to do is we need to go with what the pros are doing, but we need to also see if the market is in sync with their positions. If the market is not in sync with what the pros holding shows, then that means there is something wrong with the position with the pros are holding. This is standard data which comes from the NSE. I don't think you can split this any further, but you can send us a mail at support at Vtrender Balaji, and we will see if something is possible with your suggestion. So this coming back to this section, it's a very important section, and we are touching base upon this today. And especially because this is an expiry week, what we can start doing is follow this section once the new series, July series, starts, and keep a track of what these guys are doing, and mainly focus on what the pros and clients are doing, because FIs and DIIs will very slowly make. In fact, DIIs, you can see, they hardly trade in options. Very rarely you will find any position in the options. It's more futures, and even in futures it is more to do with stock futures, because they hedge their long cash segment with short futures. So that is what even the FIIs do. Mainly whatever futures entry you see in FIIs are mainly related to stocks, and because this is the monthly expiry, even the stocks VWAP, monthly VWAP comes into play on Thursday, and because of that, the settlement gets affected. So pros and clients, and especially when you're nearing expiry, you see what the option volume is telling you, and whether they are net call long or net put long, and accordingly uh, sync in with what the order flow and the market profile tells us. So this is not something which you can trade off on individually. This is all adding to what we already have. This is one more arrow in your arsenal, you can say. So our focus is market profile for structure, order flow for volumes, and then we have these segments: the volume X chart, the spectrum charts, and this participant positions information, which will get us more in sync with what is the reality. So I just answered that question, Prashant. This data comes from NSE as it is, so I don't think we'll be able to uh, break it further. But as mentioned, you can just send us a mail and we'll see what can be done on that. So that is it from my side for today, guys. We will again touch base on Thursday with part 2 of that menu which we had started last week. And we have taken this query about making a video on this position table. So I think that is also in the pipeline, and we'll look to make one once we are in sync, because this segment also on the chart section is something which is added recently. We did have a post on the website which was updated every day, but this on the charts and in one frame, what you see here is something which is done recently. So a lot of new features keep getting added, and we would want to make sure you are able to make use of that to the most. So definitely we will try to make one video and put it up on YouTube, and then you can refer that whenever you want. So that is it for today, guys. Let's have a great evening, and let's look forward to a interesting expiry, monthly expiry, and let's have some super trades going forward. So signing off for today, and catch you again on Thursday 5 p.m. for completion of that menu part which we had left incomplete last week. Thank you for joining in, guys. Signing off.